Alright guys, for this next lecture, a little more advanced here, we're going to go over developing strategies, how I go about it. I'm going to go step by step so you can see how I go about developing a strategy depending on whether it's an indicator or price action. As you can see here, let me remove that RSI, I don't need that. And let's take a look at Tesla options. Right now I'm currently working on a strategy for Tesla options using a higher time frame. For those of you who have been following me for a long time, or who have been a part of the Discord for a while now, know that I like trading the 1 minute. That's what I use for entry. That's what I trade. I do look at the higher time frames on the right hand side here, monthly, weekly, daily, 240 and 60 minutes. But for the most part, I always had a 1 minute chart on the left hand side. It's not until recently that I decided, you know what, I think I need to use a higher time frame. So I'm not just sitting there trading these small little scalps. I think I missed out on some money by not trading the higher time frames. And as you can see here on the 9 minutes, I mean, what a huge run up there. But again, I still have to get used to. I'm still testing things in terms of stop loss, profit taking, etc., etc. I'm so used to scalping that I still scalp, even though there's so much more to make here. I think I could have made like 50 bucks, 60 bucks off 2 contracts off of Tesla, but instead I only made, as you can see here, today's net realized P&L, 1138. The small account has grown by, I think, 12% at this point, because it's a small account, so it's easier to grow it, right? You know, those $11, $20 add up. But this is the second win for the strategy, and now I'm going to go over how to develop a strategy and how to go about testing it. So quite a bit of an introduction there. Let's start with what I like to do here. For example, I'm a MACD kind of guy. I don't really care for other indicators.
Let's use momentum as an indicator. So let's say I'm going to use momentum. Let's get rid of the MACD because I know that one so well. Let's say I want to use the momentum indicator to develop a strategy. Okay, so the momentum indicator, I got it at 14. And let's see, do I buy when it crosses over? Let's say that's going to be the trade signal, the crossover above that median line here. So you want to write that down in your notes. See here, you can add a new note if you're using Street Smart Edge Swap. So we're looking at Tesla, and let's just say momentum indicator strat. And you can just take notes. You know, entry equals cross above median line. You got to take notes, guys. It's a real hassle to make strategies, I promise you. So you got to take notes of everything. So your entry point is what? When the crossover happens above that median line. Now that we know our entry, the next step is to go back in time and give it the eyeball test. What is the eyeball test? The eyeball test is literally looking for crosses above that median line as you go backward in time. So let's look for some crosses over that median line here. Oh, there's one right here. We're just going to go back in time on the 9 minute. You can do it on whatever time frame you want. We'll get into time frames because different stocks might work better in different time frames. But for Tesla, the 9 minute works when you're using the MACD. But for momentum, we'll see. Maybe we'll change it. But for now, let's just go back in time and see what happens on those crosses. So we got a cross here above that median line. And what happens? So this is the next step in developing a strategy is what happens after your entry? What happens to the price action after that cross happens? Because it's important to know before you even start trading what's happening. What happens after a cross happens above that median line? If you know what in general happens, then you have a better chance of making more money compared to someone who just throws money at a stock and just hopes, because you know in general, oh, this stock likes to move this way after this crossover happens. Right now, I'm literally developing a momentum strategy with you guys so you can see how I go about it step by step. Not that I would use this strategy, I think, but okay, so the next step, like I said, you look at there's the cross. What happens? The price goes up. How much does it go up is the next question. That's the next step. Okay, it goes up. Fantastic. So write that down. What happens? Like, this is some seriously time consuming stuff. This is why this video is probably going to be long. But you got to write that down now. Edit note. You got to take notes. Okay, so what happens after a cross? The price goes up. Okay, now the next question is how much does the price go up? And you're going to have to write that down. You're going to have to write that down for every cross because you want to get a general idea as to how much the price tends to move overall when that cross happens. So, for example, here there's the cross and it went from 195 to a high of 196.33 on that first candle on the 9 minute. So it went up how much, guys? It went up pretty much $1.33 on that cross. Now let's look at Now we have to do that for every cross so we get a general idea as to how much it likes to move on every cross. So let's see, there's another cross here. What happened? The price went from a low of 195.52 to a high of 196.30. Now, did you notice something interesting about this stock? Did you notice? So, do you notice anything interesting about this cross? What's the difference between this cross and this one? Do you see the difference? Gonna give you 3 seconds. To me, this is obvious, which is why I don't use the momentum indicator. It's not that great of an indicator. I've tried it before, and just by giving it the eye test, you can tell it's garbage. Maybe I have to mess around, fudge around with the numbers. But on this cross over above that median line, look, it opened here, the candle opened here, and it went up as high as here and closed here. Here on this cross above that median line, what happened? Red candle, the previous candle was red. It opened here, it dipped pretty much 50 cents, and then it came up almost a whole dollar from that low. But the candle opened here, and if you bought right when the cross happens, it dips and then it rips. But if you had bought right at right when the cross happens, which is what most people do, most people buy right when the crossover happens. So you would have bought at 196 and it closed at 196.18, so you could have made 18 cents per share. You take profits. In my case, I like to take profit when I'm trading a higher time frame. I like to take profits. My profit exit is wherever the candle closes. So I would have bought in on this cross here, on this first cross here, and I would have held from 195 till, and I would have sold at 195.99 because it's hard to time the top, right? So my profit exit would be as soon as that candle finishes printing. As soon as it closes, take profits. Doesn't matter what it is. You know why you would want to do that? Because look at this. If you had continued to hold here, it would have just gone against you and came down almost a dollar. Yeah, almost $1.30 about. So that's my profit exit. Just like that, I just figured out two things. Just by going back in time and giving it the eye test, I just figured out two things. When a cross happens, it's probably best to take profits as soon as that candle closes. I won't be able to time the top. If it was that easy, we'd all be rich. Just like you can't time the bottom. It's not, yeah, if it was that easy, again, we'd all be rich. So the next best thing, in my opinion, because you're watching me develop a momentum strategy live and going over it step by step, the next thing here would be to write down, like, hey, based on what I'm seeing here, the next step is to write down, the next step is to take note of that and write down, like, hey, maybe in bold and italic letters, the best profit exit could be on the candle close. So now we have a profit exit just because we gave it the eye test, just because we're going back in time and looking to see how the price action reacts when the cross happens above that median line. So now I'm teaching you how to make your own strategy. You should be writing down notes like I am right now. You know, you got to go step by step. Let me go over it one more time from the beginning. Go to view all studies, slap on any indicator, or maybe you want to use a crossover from Emma's. Slap on any indicator. You can use the RSI. Boom. Let me just slap an RSI, and when it crosses above that median line, I buy in, and it's pretty much the same thing actually, except you don't get a signal here. You did get a signal back here. Interestingly enough. So as you can see, the RSI, I just slapped an RSI indicator on the charts, and it already is behaving differently in terms of giving you entry signals. You got an entry signal here by the momentum indicator, but not by the RSI if you're just going off of the crossover above that median line that they both have. So every indicator is going to behave differently. The price action is going to behave differently because they're going to give you different signals at different times. So that's why it's important to go really in depth like this. And I just wanted to show you that as an example. But okay, so now we know what? We know because we take notes that our entry is the crossover above the median line. We also know that the price tends to go up on the crossover. And in general, so far, it seems like it goes up around $1. Not always, but seemingly more often than not. And now we figured out that the best profit exit is probably when the candle closes. You buy in, the candle closes up here, you take that eight, you take the eight, you take what the market gives you, you take that 18 cents. And like I said, that's the profit exit. Yes, you technically on this cross here, technically you could have held another candle and you could have made so much more. But on this crossover, if you had held that second candle after the cross, you would have you would have gotten stopped out and lost some money. You would have gone down because look at this big red bar. And if you didn't sell, then you would have taken a much bigger loss, right? So, and keep in mind, we don't even know what the stop loss is just yet. Now we figured out the profit exit and we figured out our entry point. We'll figure out the stop loss as we go along. So let's keep going here. Let's see. Let's look for another cross. Oh, another cross happens right here on this. Right here happens. Another cross happens right here. And how does the price react? That's always the next question. There's the crossover. There's the entry point. There's the entry signal. That's when you would enter. You wouldn't question it. You wouldn't doubt yourself. You'd go right in like I do with the MACD. And that's why I'm so profitable because I trust it and because of other factors that I'm not going to talk about right now. Because a lot of people make a lot of mistakes with the MACD. They think it's as simple as, oh, it's a crossover, jump in. There's price action and key levels and so much more. What the market is doing, catalyst, etc., etc. I'm not gonna go into that. That's a whole nother video. I'm talking really fast. Sorry if I am. I just don't want this video to be like an hour long, but it looks like it's on its way there. So the cross happens and it goes from 194.68 to a high of 195.56. So almost a whole dollar in profit right there if you had bought immediately as the cross happens. And on top of that, remember we take profit as the candle closes. So here the candle closes and you would have made almost $1 per share. Yes, I get it. You could have held out for more, but you never know what's going to happen. You could get a crossover and it immediately dumps. So that's why my profit exit is on the candle close. You can take this strategy that I'm showing you right now and developing right in your face, and maybe you trade a lower time frame, a higher time frame. Maybe you decide, you know what, my profit exit is going to be a cross under on an EMA or an RSI, the RSI touching 90. The possibilities are endless is the point I'm trying to make. But for me, I like to keep things simple, and I don't want to have like 20 indicators just for a profit exit when I can just very clearly we see that it's probably best to take profit as soon as the candle closes. And I have a friend who does that. He buys a stock on a crossover. He trades like a 12-minute time frame. He sets a 12-minute timer, and when that timer goes off, he takes profits. That's his strategy. He doesn't even set a stop loss because he's that confident. But he has taken some losses, of course, but he's profitable, and that's his strategy. So if you want to set a timer, you can go for it. Just boom, let me set a timer. Look away. Don't look at the chart. Just look away. Trust the signal, and it would have closed and you would have made money. But it's very time consuming. You literally have to spend hours and hours and hours going back in time and looking to make sure that there's no red flags, nothing that makes you go, oh, this is a false signal. You have to check for false signals. You might get a crossover and then it dumps. So that's why you really have to be thorough. And this video is so long, goddamn. All right, but this is for your benefit because now you know, like, oh, this is how Shades develops a strategy. Holy shit, it's very time consuming, and you really have to go in depth and ask all these questions. So again, and we're still, we still got a long ways to go here. We still have to figure out the stop loss, among other things, optimization, testing different variables at different time frames. Maybe we change up the momentum and we switch it from 14 to 20, maybe because that's better. There's so many variables that need to be tested, so many confirmations, etc., etc. So maybe I might break this video into parts because I've just started realizing that this might be a little longer than I expected. Oh my god, no. I like to keep it short and sweet, but here we get a cross above that median line again, and what happens? What happens? It happened here. It went from 196.11 to 197.21. So you would have made, holy crap, man, this, I might have to use this strategy for Tesla. It's printing so far, right? $1, nearly $1, if not $1, a little over $1 gain per share on that crossover on the momentum indicator. So what pattern are we starting to see now? The crossover happens, it goes up green, and we make around, it seems in general, we're making about $1 per share on every crossover. Again, so what patterns are we noticing here? Our profit exit so far is making us almost $1 per share because we take what the market gives us, we close our position as soon as that candle closes. So now we have a good profit exit. We know that the price in general seems to be going up $1 after the cross. And on top of that, our entry signal, the cross above that median line, is so far it's so good. It's not giving us anything false. Now let's finish the day. Oh, we didn't get any crosses. So what does that tell us, guys? How many? This is another thing to take note of. We just went through a whole day here on the 9-minute time frame, and how many crosses above that median line did we get? How many entry signals? Take note of that too. 1, 2, 3, and 4. So mark that down because that's important to know. How many crossovers do we get on the 9-minute time frame over the course of the day? So we got 4 crossovers. So that means in general we might have 4 opportunities to trade in one day. That's based on just this one day though. Like I said, this is going to take, it takes hours and hours, if not 20 hours, to develop a strategy to a T. That's not perfect, but as best as can be. And I did not mean to rhyme there. I think I rhymed. But so now we know so much more than if we were to just buy and hope. That's the difference. That's why I'm profitable so far with my MACD strategies, and I'm still testing my MACD strategy on the Tesla 9-minute time frame. But yeah, but so far I'm making money, right? So clearly something's right, and you just got to trust the signal, trust your due diligence, trust your research, all those hours that you're going to put in to develop a strategy for whatever you're trading. And if we look at the next day, how many crosses? Ooh, this is nasty. If we look at the next day, how many crossovers did we get? One, two. You can call that maybe two, three, and that's it. So now keep going, keep doing that. Keep going back in time and looking how many crosses, how many opportunities to trade do you get? One crossover happens here, another one here, that's two, and another one maybe here, three, and another one here, four, five. So looks like in general, on the 9-minute time frame, in general, it seems like we get 4 to 5 trading opportunities, and that's the kind of thing you have to do. I know what you're thinking. Holy fucking shit! Maybe you're mind blown right now. Maybe you're thinking, holy fuck, that's very time consuming. Imagine this. And that's me who's experienced. Someone less experienced is gonna have to really go step by step. So and you have to really respect the stock market. Go back in time and look at every cross, every single one. Look at how the price action reacts. Look to see what's the best profit exit. What's the best stop loss? We haven't even figured out the best stop loss. Based on what I'm seeing here, the best stop loss. Let me see. I'm trying to figure out the best stop loss. I think would be underneath the previous candle. Let's look at this one. Yeah, underneath the previous candle, you would not have gotten stopped out. Underneath the previous candle, at the bottom of the wick, you would not have gotten stopped out. Let's look at the other one right here. If you had set a stop underneath the previous candle, you would not have gotten stopped out. And same thing. So far, it seems like setting a stop loss underneath the previous candle's wick might be the way to go. It's not perfect, but it's something we just figured out real quick just by looking at at the charts and the candles around our entry points. So best stop loss underneath previous candle wick. And keep in mind, I'm just figuring this out with you because I've never really developed a momentum strategy and never gone in depth into doing it because I like the MACD. So I like the MACD more, but I'm liking what I'm seeing right now. I might develop a strategy for momentum. This video was just to teach you how to develop your own strategy and how to go step by step. And this is going to be part one of the video. This is going to be too long if I keep going. I'm talking so fast to try to get this out there. But yeah, so just like that, we figured out stop loss, profit exit, how much the price tends to move in general after a cross, and we know our entry signal is the cross above the median line. And we also know that we tend to get about 4 to 5 crossovers per day on the 9-minute time frame. But there's so much more to go over. So, that's it for this lecture. Watch it over if you have to. All right, guys. So, just to recap, go to your indicators, pick an indicator, whichever one you want, whichever one you want to use. VWAP seems to be popular. I don't use it, don't care for it. But, add that indicator. Figure out what's going to be your entry signal that revolves around that indicator. From there, figure out how does the price react after your entry, and then you have to figure out how much does the price go up or down after your entry point. From there, you have to ask yourself, like, what's the best profit exit based on how much it moves after my entry into that stock. And then from there, figure out how many trading opportunities do I get per day using this strategy. And I'm not going to go into more than that. All right, guys, I'll see you in the next lecture.